Hi, this is Thierry Samlal from PMML. Today I want to present you market statistics for the province of Quebec for multifamily and land development and for the month of October 2023. So the interest rates are high, but we are feeling buyers' confidence very strong right now in the market. We've been feeling it for the past 2 months, but the month of October has been a closing month, which is very important. We have a lot of multifamily buildings that were closed in the province of Quebec, and also a lot of land that was closed. I only chose a few assets to give you this, to show you the market statistics, but the tendency is very high, and it's interesting to see that in a context where the interest rates are so high and the economy is in the situation where it's in right now, that the requests for multifamily units remain high. Vacancy rates are at a low right now. We're close to 1% in certain areas. We have immigration, which is high. Fundamentals are there. Immigration is high. We have more people coming in. That's been announced by the government. Also, we have an important amount of our population that's going above 65 years old in age, and they're selling their single house dwellings to go towards either condominiums or apartment buildings. And the interest rates being this high right now, people are choosing mainly apartment buildings. Second of all, the statistics have shown, CHMC statistics have shown that the number of buildings that have been that have obtained construction permits is on the slight rise right now. And we do know that if I'm looking at the number of transactions that we have here, and I'll give you the intel in a few minutes, the pieces of land that are being sold right now are being sold mainly to build multifamily apartment buildings. And those apartment buildings are going to see are going to go above ground probably in 2026. So we're in the planning mode right now. Municipalities have put in their PPUs, giving the direction in which they want to vertically densify and create more apartment buildings across the province. And we're seeing these plans being put in place, and now we're seeing these purchasers, promoters, and constructors buying pieces of land in a context where the interest rates are that high to be able to build assets in the future. Of course, MLI Select is is a program which is sustaining this growth. Mostly the energy efficiency part of the MLI Select plan is sustaining the growth. We have a lot of nonprofit organizations also, which are using subsidized money coming from the different governments to be able to purchase multifamily units, either new to be built or already existing. So let's go into the statistics right now. We have a lot of concrete assets which are sold. I have about 7 different buildings here I want to talk to you about, plus 2 in downtown Montreal. We have a lot to say this month, a lot of volumes going on. First of all, let's go into the Plateau Mont-Royal. Plateau Mont-Royal, which is like the west side of, if you like, of Montreal on the French-speaking quarter, close to the mountain. Public transportation is easily accessible. A lot of the nightlife is there. A lot of the restaurants are there also, close to the mountain, walking distance. You could bike into downtown Montreal very easily or even use public transportation. This sale took place on Milton. Milton is an area which is close to the McGill University and very close to Sherbrooke. So very close to downtown Montreal, walking distance away. An experienced buyer that bought from a REIT. This buyer is very active. Every month or so he buys or he sells apartment buildings. It's a private investment fund, and that this purchaser-seller has a lot of assets across the province of Quebec and has been buying aggressively all through the rise of the interest rates. Why? Because of a lot of the buyers backed out, less competition, more easier to work and more easier to get transactions happen. Considering that these transactions are taking longer to close because of financing and because of due dil, and because of the fact that the market is very busy right now, it takes a lot of time to get professionals into place, and it gets a lot of time to obtain financing on different assets. But this buyer is very patient, and he did this transaction of 112 units from a REIT. 1964 construction, paying $195,000 a door, close to 4.4 of cap rate on it. What you have to understand is a REIT is there to value add properties, but cannot do it at the same pace as a private investment fund or a private investor can, for political reasons and for ESG reasons, etc. There's a certain limitation on how much rent you could increase and how much you could optimize an asset in a very short period of time, which a private investor doesn't have and which a private investment fund doesn't have, compared to venues that are a little bit more public, like REITs, etc. Another transaction now that took place on Hutchison on the plateau, once again, 1963 construction, 69 unit. This one went for $234,000 a door. So if you compare it to the previous one I just talked about at $195 per door, this one is $234 per door. So you can see there's a value add possibility there. And if you're sitting down, I'll give you the cap rate on this one that sold for $234 a door on Hutchison in Ville-Mont-Royal. It went for a 2.2 cap. What's a 2.2 cap? That's almost a 44 to 45 times the net and in the net multiplier income. So interesting to see that. I always tell my customers, you could look at and my buyers, you could always look at the price per door, or you could look at the cap rate. But a lot of people are looking for a 5 cap, and there's some opportunity on the market. I have one that sold for 5.1, but look at this one that went for 2.2, and look at the previous one that went for 4.4. So please analyze your assets outside of the current cap rate, but the value add that you think you give to it, and putting in your own recipe into place. You know your recipe best. Where could you bring the value add on these assets without looking at the cap rates, etc. Now, let's go stay in Montreal. Let's go on Côte Saint-Luc Boulevard, which is, of course, very popular. A lot of concrete assets on Côte Saint-Luc. This one is a smaller asset, 33 doors. It went for $149,000 a door, which is a little bit below market par for that area, because even Côte des Neiges is selling a little higher than that. And Côte des Neiges, usually the prices are a little lower than what you're seeing in NDG. So I'm guessing that, this building could have probably went for a little bit more. 1959 construction here. Always staying in Montreal, let's go to Ville-Mont-Royal. For those who know Ville-Mont-Royal, it's an area downtown Montreal where mostly we have single house dwellings of large square footage that have been strongly renovated. The client base that stays there are more professionals. The property values are sky high in that area. And there's not a lot of multifamily assets that go usually for sale. And this one went and it sold for 5.1 cap at $2,017 per door, a 60 unit, which is, in my opinion, low for that market. I know because I analyze other assets in that area. So it's an aggressive price range in a context where cap rates are this low right now. But what you have to understand is probably the deal was started off in a context where market confidence was higher than what it is today, and probably that's why the buyer got a 5.1 cap on it. So congratulations to the parties here. I find it's a nice transaction to look at. Let's go to Gatineau, which is right next to Ottawa. I talk about Gatineau. I've been talking about Gatineau for 2 years. Gatineau, there's a lot of multifamily buildings going up, high rises right now. Zoning has exploded in that area. You'll have a lot of assets of 10 stories and above that you're going to be seeing built in the next 2 years coming out in Gatineau. But these assets are probably going to rent for a high price per door. Now, it's interesting to buy an existing building, and instead of having a rent, for example, at $2,500 per door, well, having rents ranging between, say, $1,900 and $2,500 for the population that could pay that. So buy an existing asset, pump up the rents, create value add, and that value add increase is going to be sustained on the higher rents that you're going to find in the younger buildings. So that you have that play there, say between $1,900 and $2,500 to increase your rent. So interesting to see that transaction, a 74 door that went for $257,000 a door. $257,000 a door. I don't have the cap rate on that, unfortunately. On the same street, right next door to that, in a same type of transaction, a 24 unit that went for $94,000 per door, which is below market par completely for that area. Let's finish by La Rive-Nord, so in the north end of Montreal, Laval, which is an island right next to Montreal. And as for those who know Laval, there's a metro line, so a subway station line in Laval, going up through Laval. And when you come into Laval, the first metro station, this is where this asset is on Cartier Boulevard. So interesting to see, 1977 asset, 30 doors, went for $150,000 a door, which is very, very low for that area. You have to consider that values are much higher. And the cap rate here, 3.8. Once again, please don't look at your assets only based on cap rates. You're going to miss on opportunities right now in the changing market. You have to look at the value add that you could add on the property and add your recipe. One last transaction in Saint-Jérôme. Saint-Jérôme, which is the last main city going up into the Laurentians. Saint-Jérôme is a booming area, a lot of new construction taking place here. 1978 asset, 24 doors, went for $126 per door and at 3.8 cap rate. Once again, a lot of value add. In the province of Quebec, for buyers who are listening to me that are outside of the province of Quebec, please call us in, please call me, and we'll talk about the market here, because there's a lot of value add left to be pumped out of these assets, and a lot of opportunity with the type of clientele base that we have here to increase to add value to your assets through construction projects and the MLI Select program. Two things I want to talk about to continue. Two properties that sold on Sherbrooke in Montreal. Location, location, location. These properties, addresses are in the 2000 range. 2000 range is close to St. Lawrence Boulevard. As you know, St. Lawrence Boulevard used to be the old main in Montreal and is very close to downtown. Two assets, one sold for a 4.5 cap and the other one sold for $400,000 per door with a lot of value add. It was a semi-estate sale, but still a lot of value add for assets ranging between 1930 and 1960 construction. A lot to say this month, but I want to talk to you about land. There's a major transaction that took place on the South Shore of Montreal for a piece of industrial land sold to a battery company for $240,000. The major investments are going to be taking place in that area. It's in Saint-Basile-la-Grande. There's going to be a factory that's going to be built there. And you know, when you bring a factory into a municipality like Saint-Basile, you're bringing in jobs, you're bringing in commercial strips, you're bringing in multifamily buildings. And that's what I like to see when such a large industry is coming into one municipality, is to see the development. Another municipality that's in full development is the city of Prévost, which is on the north end of Montreal, right before when you go into the Laurentians, when the mountain range starts. We have a mountain range north of Montreal. We have a mountain range south of Montreal. So Montreal is basically in the valley. And Prévost is a city very close to Saint-Jérôme. So, you know, you have a large population there that needs apartment buildings, that needs land, etc. And Prévost is it's a forest area, so there's a lot of nature there. It's very close to Saint-Jérôme, easily accessible if you want to go into downtown Montreal from time to time, if you could work from home part of the time. So interesting here to see the city of Prévost that bought a golf course that was purchased previously by two promoters, contractors, and now that bought it back for institutional purposes. They want to redevelop to add services that the city is going to give to the population base in the area. And that bought this piece of land for $34 million. That's a huge transaction to buy back a piece of land. Very interesting to see that development. So, you know, if you want to buy in the north end of Montreal, it's a great market to purchase in. Different transactions here. I can't talk about all of them. I want to talk to you about 4 quick transactions. You know, several lots that sold for $21 million. Here I have this, once again, bought by an institutional player. Institutions need to put infrastructure into place. The infrastructure that exists is outdated, and we need to replace it right now. 2 transactions in Saint-Lazare, which is very, very close to Rigaud, which is in the western part of Montreal, outside of West Island, where the REM was built. You know, the REM is going all the way down, almost into Vaudreuil. And this municipality is located north of Vaudreuil. It's Saint-Lazare, 2 pieces of land that sold for over $28 million. That's a huge amount in a context where the interest rates are this high. Finally, for those who knows Laval, Laval is an island north of Montreal. The island itself is a city. It's a huge piece of land. And Laval changed zoning recently, and now we're seeing transactions being picked up after the zoning change. We have finally permits that are coming out and people that want to build. And this piece of land went for $4.7.5 million. And that's now not counting all of the other transactions I can't talk about because I like to keep my presentation short and interesting, but there's an incredible amount of pieces of land being sold right now in multifamily buildings. The number of offers accepted at PMML, we have over 1,500, almost 1,600 exclusive mandates right now across the province of Quebec. There's a lot of those in accepted promise to purchase. Stay in the game, please. Don't necessarily look at cap rates or prices per door. Look at the value add you could give to a project. See if that project can be integrated into your existing assets if you already have some. The buyers which are here are experienced buyers. They're buying repeatedly, even though the interest rates are high. And now that the interest rates are stable, although economy is not that good, but we know that fundamentals are high. We need apartment units across the province of Quebec. We're going to need them for the next 5 years easily, and even 10 if you're looking at certain projections. So stay in the game. Call me if you have any questions. You could go to the pmml.ca website to see our opportunities. And I wish you great success in your business enterprises. And we'll see you next month. Take care.